Welcome to chartingwealth.com for Thursday, the 16th of April, 2015. We are looking at IYY, where we always start total market. This is an ETF, an exchange-traded fund that we look at every single day. And what have we been seeing the last 8 days going on now? We've had a good trend line going for about 6 days or so. And we've seen the 4-day chart turning down on us a little bit. However, we have continued to see the 2-day chart, the big chart, continue to move up. We have drawn a decent trend line. Remember, trend lines, we always want to connect at least 3 candles. Again, this is the 2-day chart. What have we seen happening? Well, we saw the market turning over right here between the 10th and the 14th. This is on the 2-day chart. And we saw the derivative oscillator moving up with us. Also, the MACD, the moving average convergence divergence. We also have a good training on that. If you will just follow us on the website or on Twitter or on Facebook, you can listen to the quick little class we give on the MACD. We'll be doing a lot more of that in the future. But you can see where the derivative oscillator moved over, and we always like it when the derivative oscillator and our MACD move at the same time. We also like it when we see the actual price movement go through the moving linear regression lines for the 30 and 34 period. And again, we're talking about a 2-day chart, so simple math, the 60-day and the 68-day movements on those charts. So what we see happening now is we continue to see a broad up movement in the market. As we always do, let's drop back a quarter. And what we're to a quarter, we're going back to the 4-hour half-day chart. And here is our 2-day trend line still drawn for us. We always like to stay above that, of course, when we have an up movement. We can see all the way back here between the 2nd and the 6th when we had a crossover going up on the MACD. We had already had some movement, as you can see in the there we go, sorry about that. Already some movement in the derivative oscillator earlier than that. We don't like necessarily to see that. We like it all to take place at the same time, but that was okay. Right as the MACD crossed over, we saw a good crossing through the moving linear regression lines, and we saw a little bit of a stall out here that we talked about many days ago, as you will recall. We saw the market ramp up. Then we saw this doji that gave us a little bit of concern. We saw some movement down yesterday, or well, that was actually, today is this is the broadcast for Thursday. This is Wednesday. This is Tuesday. Had a little bit of concern there at the end of Monday, but what did we see happen? Remember, we continued to talk about the fact that we had no crossing going down on the MACD. We did see the derivative oscillator falling on us, but the MACD is our real strong indicator. And remember, the 2-day chart was continuing to go up for us, plus we had no violation of our trend line, and that's what's so important, the trend line on the bigger chart. So we continued to see up movement despite some concerns right here because we were paying attention to the bigger chart. Bigger charts are stronger. As a surfer, I always talk about waves. The bigger the wave, the more power it has to carry things on. You don't worry about the little ripples, you worry about the big waves. The 4-hour chart is not a ripple, but it's a quarter the size of the big wave, which was the 2-day chart, which continued to push things up for us. So now let's go back to the 2-day chart, and let's go to the SPY. This is Standard & Poor's 500. Again, this is an ETF that charts that, and look at our beautiful trend line. Don't you love it when it's connected so well? We again saw a crossover on the 10th, the same day that we had the derivative oscillator moving up. Look how beautiful that movement is over the last few days, starting to go through the moving linear regression lines here. Now let's back it out a little bit. What do we see on the 4-hour chart? Again, more nice, strong up movement. We had a little bit of convergence going on here, but more divergence, meaning moving away from each other on the MACD. The derivative oscillator, you always want it to look like this on up movements. You don't want it to start stalling out, but it is a little bit. However, again, we're still going with our 2-day chart. We're above our 2-day trend line. We're above both of our moving linear regression lines. we're feeling more positive about this. Of course, if you jumped in the S&P way back here, I'm hoping you took some profits maybe in here. Surely you're taking some profits now. We never know. We're getting through the month of April. Remember, the month of April is the last of our 6 strong months. We start getting to sell in May and go away, the choppy time. So we love to trade when we can. We love to invest when we can and make money during the good times. And those are the months that end with April. Of course, we're coming up to expiration Friday this week. So let's continue to follow our charts. We're going to go back to the 2-day chart, and let's go over to my favorite index, which is the Qs, the NASDAQ 100. Look how clean that's been. Now look, it's not yet crossed over. With all this up movement, there has not been enough power to push the MACD over or the derivative oscillator. Now, if we look back to our 4-day chart on the Qs, we will see what occurred. See this strong down movement right here? We still are not as high in the price itself as we were all the way back on the 13th. We see the derivative oscillator has fallen off precariously. Look at this convergence we had going on here in the MACD. Still not a lot of difference. The MACD is not, let's check that out. It's not, oh, it's almost as high as it was at a much higher high over here, but we really don't have a divergence yet in the MACD and the price, but it has not been strong. When you don't have this strong up movement above where you had previously been, that's the reason that we didn't have the MACD and the derivative oscillator on the 2-day chart be as strong in the up movement until about now. So we'll continue to watch the Qs. Hopefully, if you were in the Qs starting back when we realized what was happening around the 6th and you hopped in, that you have already taken some good profits when it reached its peak day on the 13th. What is it doing now? Well, according to the 2-day chart that we were looking at earlier, of course, we're just now having our crossing almost going up. We do have the derivative oscillator strong on us, and it looks like we're about to get the MACD to cross. So we're feeling good with this nice trend line. We are still seeing, as far as the Bollinger Bands go, these volatility bands, we're getting to the top there. But hopefully we'll continue to see some push through. We have everything telling us that's where things are. And again, remember how bullish it is going into options expiration on this Friday. If you're a reader like I am of the Stock Trader's Almanac, you know how strong that typically is. And if you don't have a copy of the Stock Trader's Almanac, please go to their site. Buy that. You should follow that every day. It's so helpful with historical trends. Now, and that is an unpaid advertisement for them. Good folks. I really appreciate their work. Now, lastly, let's drop over to gold. Look at gold. We keep talking about what is gold doing, how gold appears to be trying to go down, but it just hasn't gotten the momentum to go down yet. This, again, is the 2-day chart. We saw gold come up from, what was that, about 111 all the way up to something like 117.58, and then we got a doji star here, hammer. We see things sort of, look at how it's just monkeyed around here over the last 2, 4, 6, 8 time periods, 8 days, all within this big candle back on the 6th on Monday. What is it going to do? Well, typically when you're monkeying around like this, your derivative oscillator's falling off, we still don't have a downturn. I mean, there's nothing to say it's not going to go back up again, but when you have so much digestion time, typically you lose energy and go down. Gold is gold. We will just have to see. We still are. I mean, from all intents and purposes, we're not quite pushing through this 50 period moving average. So that's a 100-day line. It just can't seem to get through that, can it? So we'll just have to continue to watch gold and see what it is going to do. Now let's get a little better feel for where gold has. Now see, this is sort of the way it finished up the day. Interesting 4-hour chart. Again, half day. We see where gold rolled over, where it accelerated on its down movement, then started cutting back, and now we see an attempt to move up. We don't have any crossing on the MACD. We do have the derivative oscillator petering off. We're still above the 50-period moving average on the 4-hour chart. So what is gold going to do? Well, it doesn't want to go down yet. So maybe it'll make some strong up moves until we see something crossing here on the MACD. You do see a convergence. It is getting less space here. So we'll just watch. Continue to watch gold. It doesn't want to go down. Maybe it'll keep going up. Hopefully, if you got into gold back when we started identifying this uptrend way back here, you already made your money at the peak. And you're just watching what's happening now, seeing if there's another buy-in point. But continue to watch it. We will see what happens. Well, that is our market review for the day beginning on Thursday, the 16th of April 2015. Hope that you have a great day trading and that you've had a great week so far. Thanks for joining us, and don't forget you can join us every day that the market's open here on chartingwealth.com.